Welcome, everyone. We're going to be talking about a pretty significant update for anyone who pays taxes in the UK. And Pro Tax Accountant wanted to make sure everyone was in the loop. This discussion is brought to you by them. You probably know them. They're a pretty big deal around here when it comes to accounting.
Mhm.
All right, so we're diving into it. HMRC is calling their new digital reporting service. You've probably heard rumblings and bits and pieces about it, and we're aiming to just lay it all out there so you know exactly what it means for you.
Sounds like a good plan to me.
Okay, good. So we've got some sources here. We're going to be looking into what this service is all about, who exactly it's going to affect, and why HMRC is even doing this whole thing in the first place. Think of this as your cheat sheet. We'll get to the need-to-know info without getting bogged down in all the technical jargon.
I think what's fascinating about all of this is the scale of the change. We're not just talking about a tweak here, a small adjustment there. This is a complete overhaul of how HMRC interacts with, well, pretty much every taxpayer group out there.
Yeah, you're right. This is a big one. So we'll be exploring this in detail, getting into the different parts of this service, making sure you know what to look out for. Knowledge is power and all that.
Absolutely. The more you know, the better prepared you can be.
Exactly. So let's start with the basics. What is this HMRC's new digital reporting service?
Okay, so in a nutshell, it's about moving everything online, tax reporting's going digital, and for some groups, it's going to be mandatory. It's a core part of this thing called Making Tax Digital, or MTD for short. And it's not just one single platform or website. We're talking about a whole bunch of online systems tailored to different types of taxpayers.
Oh, so instead of dealing with those stacks of paper forms or even just filing everything once a year online, now certain taxpayers will have to log in to these specific portals. They'll be reporting income, maybe sales data, or even production details. And they'll be doing this more regularly.
Right. The aim seems to be to make tax management more real-time. That way, errors should go down, and HMRC should get a more accurate picture of what taxes are owed.
And hopefully it'll make things easier for taxpayers, too.
Exactly. If it all works as intended, of course. But yes, the idea is to streamline everything.
So it's not one giant system for everyone.
No, it's more nuanced than that. It's a series of targeted online services, each one designed for a specific reporting need. HMRC is rolling this out in stages, starting with certain groups first. It seems pretty strategic.
Makes sense. So who's affected right now? Who needs to pay attention right this second?
Well, a few key groups are already knee-deep in this.
So first up, we've got these digital platform operators. Think companies like eBay, Etsy, Airbnb, the big names. They've actually been using a specific online service since December 2024. They have to report data about their sellers every year. The first deadline was January 31st, 2025. That covered all sales from January 1st to December 31st, 2024. HMRC estimates that around 10,000 operators in the UK fall under this category.
Wow, that's a lot of data.
Yeah, it is. Okay, then there's the alcohol producers. Your breweries, distilleries, and cider makers. About 5,000 UK businesses in this sector have been using what's called the Manage Your Alcohol Duty online service. That kicked off on February 1st, 2025. They have to do a monthly return, submit their payments, all online.
Monthly, that's a big change for them.
It is, but it seems to be working pretty smoothly so far. But the really big shift, the one that's on everyone's radar, that's coming for sole traders and landlords. And this is all into the MTD for income tax regulations.
Oh, yes, that's the one that's going to affect millions.
Yep, if you make over £50,000 a year as a sole trader or a landlord, you have to jump on this digital system, starting April 6, 2026. And then from April 2027, that threshold drops to £30,000. So that's potentially over 4 million taxpayers. Huge.
Absolutely huge. It's a game changer for sure. And this phased implementation means that your obligations and when these new rules apply to you, well, it all depends on your individual circumstances. So it's really, really important to know what category you fall into and when the new rules will actually affect you. Can't emphasize that enough.
Yeah, good point. And there are some pretty significant numbers floating around that really highlight how seriously HMRC is taking this whole thing.
Oh, absolutely. Let's not sugarcoat it. There's some hefty penalties involved.
For instance, if those platform operators missed that first deadline back on January 31st, they could be facing a penalty of up to £5,000. And on top of that, there are daily penalties that could reach £600 per day.
Yikes. Yeah, that's not something you want to mess around with.
No kidding. But on a positive note, HMRC's been seeing a really high rate of digital uptake for other services, like their Customs Declaration Service, or CDS. Back in March 2023, almost 98%, 97.8% to be exact, of import declarations were being done through CDS. So it seems people are getting comfortable with doing things digitally.
Right, so there's a precedent for success here.
And HMRC's shown they can handle these large-scale digital transitions.
Yeah.
They're in the process of moving 1.2 million tax credit customers over to universal credit. And at their busiest, they were managing something like 80,000 migrations every single month.
They've got the infrastructure, that's for sure.
They do. Okay, now for those of you with side hustles or smaller ventures, there's some good news. This whole digital reporting thing, it doesn't change that 1,000-pound trading allowance that's already in place.
Oh, that's a relief for a lot of people.
Right, so you can still earn some extra cash on the side, tax-free, no need to worry about the digital reporting stuff, at least for now.
At least for now. Things could always change.
True, but for now, that's a win. So why is HMRC doing this? What's the big push for all this digital stuff?
Well, there are a few reasons. But the biggest one seems to be cutting down on errors. Digital systems, they have those automatic checks. They should theoretically lead to fewer mistakes compared to those old school paper processes.
Right, nobody likes getting those tax correction notices in the mail.
Nobody. It's stressful.
It is. And HMRC wants to improve tax compliance. So with more frequent reporting, especially from these platforms and later from sole traders and landlords, it's going to be a lot harder for people to, well, underreport their income.
It'll be interesting to see how that plays out.
Yeah, it will. And of course, there's the efficiency factor. HMRC handled over 66 million online transactions just last year. Shifting more of these processes online, it saves time, it saves money, both for HMRC and for us, the taxpayers, hopefully.
And this is all part of a larger trend, a global shift towards modernizing tax administration.
Really? So it's not just a UK thing?
Nope, a lot of countries are doing this. It's about closing the tax gap. That's the difference between the amount of tax that should be collected and what's actually collected. And digital reporting is seen as a key strategy to improve accuracy and boost compliance.
So let's break down how this works in practice, specifically for those digital platform operators. Got an example?
Sure, let's say you're a craftsperson selling handmade goods on Etsy throughout 2024. Etsy, being the platform operator, they collect all your sales data, and then they have to report that information to HMRC.
They report it in a specific digital format, right?
Yep, an XML file, by January 31st, 2025. And the seller, they get a copy of that report too for their records.
And an XML file is just a standardized way for computers to share data, for those who don't know.
Exactly. It's all about making sure the data is transferred correctly and securely.
So the responsibility for reporting shifts to the platform itself.
It does, and that's a big deal, because it aims to capture all those transactions that might have slipped through the cracks before.
Because individual sellers might not have reported them.
Right, so it's a more comprehensive approach.
Okay, so HMRC has this specific online service through all this digital platform reporting, right?
Yeah, it's called Manage Your Digital Platform Reporting. You can find it on gov.uk.
So platform operators have to use that, and they need to let HMRC know if they're actually reporting data or if they're excluded.
Yep, and they had to tell HMRC by that January 31st, 2025 deadline. Otherwise, they risk getting hit with a penalty, up to £1,000 just for not registering.
So what can they do once they're registered? What does this online service actually offer them?
Well, first and foremost, they can submit their reports, of course, but they can also update their platform details, change their reporting notifications, manage their contact information, add team members, and even indicate if another platform operator within their group will be handling the reporting for them. It's called assumed reporting.
So it's a pretty robust system. It's not just about submitting a file and you're done.
Right. It's a whole management platform.
What kind of information do platform operators have to include in their reports?
So they have to report on sellers who are actively selling goods or services on their platform, sellers who are making money, basically. And those sellers have to be either UK residents or residents of other participating countries, which are called reportable jurisdictions.
Reportable jurisdictions, what are those?
Basically, those are countries that have similar agreements with the UK for exchanging this kind of digital sales data. It's part of a global effort to improve tax transparency.
Okay, that makes sense. So the platform operators have to report on these specific sellers.
Yes, and even if they use a third-party service to help with the reporting, they're still ultimately responsible for making sure that due diligence is done properly on those sellers. And the reports, they need to be submitted in that XML format.
By 11:59 p.m. on January 31st for the previous reporting period.
Exactly. And as we mentioned before, late submissions can lead to some hefty fines, so don't be late.
Yeah, good advice. So Bringing it all together, HMRC's new digital reporting service, it's a major change. It's already affecting those digital platforms and alcohol producers.
And it's going to have a huge impact on sole traders and landlords in the next few years.
It's all about moving tax reporting online, making it more efficient, more accurate.
And here's the big question for everyone listening. Are you ready for these changes? Because understanding those specific requirements, those timelines that apply to you, that's crucial to stay compliant and avoid those penalties.
Absolutely. You don't want to get caught off guard. So if you want more info, if you want to know exactly how this affects you, talk to the experts. Reach out to ProTax Accountant. They can provide tailored advice, help you navigate this whole new system. They're the best in the business.
Couldn't agree more. Don't wait until it's too late. Get the help you need. Make sure you're prepared.
All right. On that note, thanks for joining us for this deep dive into HMRC's new digital reporting service. Stay informed, stay ahead of the curve.
And we'll see you next time.